UPBOptionMillionaires.com, August 6, 2015. It's a Thursday. S&P 500 futures up a little bit here to start the trading session. But I want to bring up the VIX because everybody's talking about this market pullback. MarketWatch now dedicating its headlines to talking about market crashes instead of the Greek and China crisis. And you go back, we've had so many headwinds throughout the move from a 2009 crash up to record high prices. Look at the market, though, as far as the VIX is concerned, continues to trend lower, which implies higher stock prices, in my view. Lower volatility means less fear in the marketplace, which means people are buying stocks. But you won't hear that from those uber bears who've been short this market every day. Since the lows in March of 2009, and why? Why? Because they like fighting the trend. This is, fighting the current. Why would you fight it? Go with it. And if you look, the trend remains firmly entrenched to the upside. You have a VIX slowly melting lower. You have an S&P 500 continuing to grind higher. Consolidation here in 2015, which is actually good. Kind of emboldens the bears a little bit and allows them to position themselves to lose whatever kind of nickels and dimes they have left as we move to new all-time record highs for the S&P 500. Now, if you want to look at a chart that's broken, here's the Chart School 101 here. This chart, this trend has been broken. This is energy. Look at this. We had a nice trend from the lows in 2009 to the upside, and now we're trending lower. Let's look at a chart that's not trending lower yet. Yes, this trend remains firmly entrenched to the upside. And sure, when it breaks, I'll be buying puts. I'll be more aggressive trading for downside. But right now, this trend remains entrenched to the upside. We trade for upside. Let's look at another chart that looks like it's going higher. Facebook. If you look at Facebook, you can draw a nice flag here. Broke out of it yesterday. Looks poised to hit triple digits. A stock also in the social media sector. Twitter. Look at Twitter. The breakdown. Long-term trendline support has significant candles to the downside here over the last 5 trading sessions after its earnings report or lack thereof. And if you look under the 29 level this morning, also new all-time low for Twitter. And if we pull up just a longer-term chart, even though it hasn't been trading for 5 years, you can see these candles here on a weekly basis. The bleeding will stop at some point. The market cap is down underneath the valuation of WhatsApp that Facebook bought for $22 billion or something like that. So as the market cap continues to shrink, I think the speculation of someone buying them out or some sort of activist investor will get this stock back over 30 bucks. But timing is everything there, and it might be a little bit of a time before that does indeed happen, which could continue to lend weakness to the shares. So that's Twitter. GMCR, after the bell yesterday, reported earnings. Look at the decline it's had from 155 late last year down to 70, over 50% haircut. Now you look at the move we had recently. A couple analysts upgraded stock. Look poised for a recovery to the upside over 100 bucks. It's done the exact opposite. And this only, in hindsight, trading 101 turns into a bear flag. The stock is down under 55. Analysts still coming out before the bell this morning talking positively about the stock. We'll see if we get a little bounce here off the lows, but something to keep an eye on. Let's also look at Tesla. Tesla had earnings. The analysts are starting to really get negative on the stock. Also, some of the financial sites and bloggers. But here we are. We're down to this 250 level here after earnings last night. Finding support. You look, draw a trend line across. That would be a nice area of support so we can see if we get a bounce off of that level here. Today, Apple. Analysts came out today talking about it being a golden opportunity. So we'll call it the golden apple. Apple had a strong move off its lows. The stock was in a free fall till yesterday, right at the open. Bank of America downgraded the stock, and that kind of elicited this strong recovery rally here that we saw yesterday. Right in the morning at the opening bell, we pulled all the way up to almost 118 before pulling back, closing right in the middle of the 115s there. And we'll see this morning if we get a little bit of a bounce, as an analyst again has come out. Said it's a golden opportunity to get into Apple. I'm sure Carl Icahn's going to come out and say the same thing in the next coming days and weeks. But you look, and it's a 5-year chart. Pull back even further, go back to 10 years. And this is just one of those cardinal pullbacks. We've seen them. This is the third leg to the upside. We have leg 1. We pulled back another leg. And remember, back in 2013, I was saying at the time, as everyone else was talking about it being the next Microsoft, this dull, boring stock. that it was going to hit new all-time record highs. We hit to May of 2013, marked a significant bottom for the stock, has more than doubled since then. Leg 3, now we're pulling back again. We have a nice pullback. Now, I mean, if we're going to duplicate the pullback we saw at the end of 2012, that is going to, into May 2013, that is going to imply further weakness for the stock. But if this is just half the pullback that we saw for leg number 2, and we embark on leg number 4 to new all-time record highs, the selling could indeed be done, and that golden apple will be the time to eat it right now. All right, UPB here, OptionMillionaires.com. It is a Thursday, August 6, 2015. A couple other things to watch, and I'm going to let you go. Gold! Gold continues to melt to the downside. Now, seemingly, all the bulls up here, save for Schiff there, who's been bullish gold since he was in diapers. Now it's becoming the bearish, hey, we're going to 50-40 here on the GLD. I'm not so sure. We see a little bit of a bounce here to kind of sober everyone up, which would imply a possible bounce here for GDX, the gold miners ETF, which broke through the 2008 financial crisis lows. Wow. Also, a stock actually that was rallying yesterday briefly, FCX. Look at this move to the downside. I talked about this head and shoulders pattern that was forming. You see a left shoulder ahead, right shoulder. It was a delayed reaction, but what a significant move to the downside. So we might get a bounce in some of these names, especially if the market bounces here. The U.S. dollar index. Let's look at the U.S. dollar index real quick. And then, yeah, I'm going to let you go. U.S. dollar index. Wow. We are certainly making our move back up. The parabolic move we had to start 2015 into triple digits. We've consolidated. This is something that we really don't want to see if you're a market bull. We don't want to see that dollar start spiking to the upside again, and that is exactly what's happening. All right, UPB here. I'll see you in the chat room at OptionMillionaires.com. Have a great day.